So you could buy a $300,000 house for $1,500 bucks.
That's right. Down. If the one objection you have to buying a house is the down payment, that's the easiest hurdle to jump over.
What? I thought the hardest part about buying a home was coming up with the money for a down payment. Well, it's not. In this video, you'll learn 3 ways that you can buy a home with no money down. And be sure to stick around to the end where you'll learn about how to get tax credit for your house payment and put more money in your pocket. Stay tuned. So what's up everybody, I'm Benj here with Triple Cord Real Estate, and today I'm at Guaranteed Rate Mortgage, and I'm with my buddy here, David Moberly, who's a loan officer here, and he's going to tell us how you can buy a house with no money down. And from what I understood from what we were talking about earlier, there's kind of 3 really options, and maybe even more.
There's a lot, but yeah, there's 3 main. So
take it away.
First one everybody knows about probably, but if you don't, if you've got veterans benefits, the VA loan is a true 100% financing program. So for all military veterans with at least a year of active service, or if they've done 6 months of overseas as a Guard member, typically you've got veterans benefits. Right away you're now qualified for a VA mortgage with no money out of pocket.
How does the interest rate actually compare on a VA loan to a conventional loan? Is it the same? Is there a difference?
Yeah, so VA loans are typically a little bit better than conventional. I think VA loans are one of the best loans out there. If you've been wounded, as you mentioned, one of the great things about a VA loan too is actually even the funding fee, the way that VA does mortgage insurance, that goes away entirely. So one of the downsides of the VA is what's called a funding fee. It's a cost the VA charges to insure the loan. If you've done multiple VA loans, that can be a little expensive. That might be the only negative on a VA loan, but the rate's fantastic. VA rates are typically in the 2.25%, 2.5% interest rate right now.
On a 30-year?
On a 30-year fix.
That's amazing. What other options are out there?
So being in Idaho, we're really fortunate. We've got a lot of what are called rural development eligible areas. So the rural development loan is a loan actually backed by the United States Department of Agriculture. No Fannie Mae, no Freddie Mac, no Federal Housing Administration. It's their own loan program.
So it is a government program, but just not Fannie Mae, Freddie Mac.
Correct. Yep. The stipulations on that one really are their location based. So you can't use a USDA loan. And by the way, if you hear USDA and RD interchange, that's because they're the same thing. So if you're buying a house in Boise, Meridian, Nampa, probably don't have an RD option. But there's a lot of areas really close to the downtown part of Boise that are eligible. Pretty much all of Kuna, most of Star, pretty much all of Middleton, Emmett, Idaho. These are areas that if you buy in that location, rural development is an option for you with a true 100% financing.
So you put 0 money down if you move to Emmett?
Correct.
Or if you move to Caldwell, kind of further to the west. You're saying?
Way out in Caldwell, kind of towards Homedale, Marsing, you know, out of the area basically. Think rural. That's kind of.
So 0 money down, but the kind of the downside of that would be that your rate's going to be higher. Your interest rate.
Rate's going to be your VA rates. They're really low. We're 2.5, 2.75 on a 30-year fix for RD as well.
And what about to qualify as far as like credit?
So RD kind of runs its own rules. With RD, the minimum credit score is 640. But they're pretty strict in the guidelines. I usually tell folks if we're below 660, an RD loan is going to be hard to get approved. We can try it if all other factors look really good. Debt to income ratio, if they're maybe putting a little bit of money down or have a couple of months of the mortgage payment in the bank after closing, that could help us get an approval at 640.
And is there a sort of an income limit?
There is. Yep.
What's the
so RD has an income limit in our area in Ada County of I think it's $90,300 if your family size is 1 to 4. If you have 3 kids or more, so family size of 5 or greater, that income limit actually goes up to $119,200.
Oh wow.
So pretty reasonable.
Yeah. So if you make less than 119,000, you're moving to Kuna, and you have good credit score, this is a great loan. And 3 kids,
Got 3 kids.
Forget the kids. You could get into a house with no money down.
No money down, and in fact, RD, if the appraisal comes in above asking price, we can actually finance even the closing costs.
Wow.
It's the only loan program that allows for that.
What's sort of like I hear the word, you know, the letters FHA thrown around. What is an FHA loan? How do you qualify, and how does that play into this discussion?
Yeah, so FHA is a Federal Housing Administration loan, and that's a loan with a down payment requirement of only 3.5%. So that's what we consider like a low down payment option. Conventional for first-time home buyers also has a 3% lower down payment option. So there's also programs, even if you're not in Kuna, if you don't have veterans benefits, where you don't have to do 20% down or even 5% down. You can do 3% on a conventional or 3.5% with an FHA loan.
Okay, and what would be the difference between the two? Why would you go for an FHA versus a conventional?
Credit score is probably the big one. So FHA has a fixed mortgage insurance premium regardless of credit score. So if you've got a 609 credit score, your mortgage insurance on a conventional loan would be extremely expensive. Where with FHA,
up until the 20% basically too.
Yeah. But even your interest rate would be impacted pretty largely.
Okay.
Where FHA, the credit score doesn't impact your interest rate or your mortgage insurance nearly as much as on a conventional loan. So a really good credit borrower, we might go conventional. Newer first-time home buyer, or maybe someone without a lot of established credit or have had some credit challenges in the past, FHA is probably the best option.
And is there an income limit on that, on the FHA?
Not on FHA. No, there's a purchase price. Well, there's not a purchase price limit. There's a loan limit of $330,000.
Okay.
So if you're borrowing more than $330,000, that's where we would probably not look at FHA as your best option.
So you can get in with an FHA loan for 3.5% down, but if you live in Idaho, what? There's another program,
but wait,
there's more.
Yeah, mine's today for the knife set. So we're really fortunate. We live in Idaho, and Idaho has what's called a Housing and Finance Association, which is a non-profit. We call it kind of a quasi-governmental entity, and they do a couple things. One, they're a loan servicer that's local, so they're a great loan servicer, but also they have some really cool loan programs for some home buyers, for people under median income limits of $110,000 that allow you actually to couple your FHA or conventional loan with either a forgivable grant or a second loan to make that down payment as low as half of 1%. Yeah, that's the stipulation on all loan programs right at housing. They want a minimum borrow contribution of 0.5%. Okay. So for example, say you're buying a house for $300,000 and the seller's not paying closing costs. Okay. So you've got enough money to pay for the closing costs. We can do a full 3.5% grant to make it true 100% financing as long as the borrower is bringing in half of 1% of the purchase price. So on $300,000, they need a minimum contribution of $1,500.
Wow. So you could buy a $300,000 house for $1,500.
That's right. Down.
Yep. Wow. So this grant, though, it's a forgivable grant. Yep. So the government just says, we're not even gonna make you pay this back if you're in the house for 10 years or something like that?
Yeah, 7 years, kind of. So what'll happen is your interest rate's going to be higher if we do the forgivable grant, and then it's prorated over 7 years. So if you sell a home after 2 years, you're going to be responsible to pay part of that grant back.
Right. Because that's what I was thinking. Why don't you just buy it with no money down, sell it within 2 years, or refinance and get a conventional loan?
No, if you refinance, you still have to pay it. So maybe the better option would be the second option, which is called a good credit reward second. Okay. So if a borrower has a credit score over 640 for some loan programs, over 680 for other loan programs, this is where you need to, do a little bit of digging on this. But if you're over 680, you'll qualify for all of them. But it's a good credit reward second, up to 2.5% of the purchase price. Okay. So say you're doing a conventional 3% down. We can do a 2.5% second loan. It's a 10-year mortgage with no early payout penalty. And I like that.
You can pay that off.
You can pay whatever you want, and also that doesn't cause your interest rate to go up like the grant does. The rate would go by like 0.125%, but really not. So instead of 2.5, maybe it's 2.625. Big deal, right? Still great rates. Second loan, and then the borrower's coming in with, as long as they come in with 0.5% or more, they can qualify for that loan program.
All right. So I know that it's different for every individual. Depends on how much they make, their credit score, their income, their debt. Can you give us even a ballpark figure? If somebody's buying a $300,000 house, they want to get an FHA loan that is 100% financed. So they're getting basically a loan for almost $300,000, and they're getting the second loan that you're talking about. What does their mortgage payment look like every month? Is it in the $1,500 range, $2,000 range?
Yeah, so the biggest challenge with that is property taxes and insurance are so different in 80 county. So, I mean, let's just assume $300 a month for property tax and insurance. I don't know if that's a great assumption, but we'll use that number. For a $300,000 FHA mortgage with no money out of pocket, I would estimate that payment's going to be right in the ballpark of about $2,000.
Okay. In addition to the $300, or that's including? Okay.
That's everything.
So
about $2,000. If you're in 80 county, maybe a little bit less because the property tax are a little bit lower. If you're doing your own 3% down and getting rid of the second loan, I mean, there's a lot of different combinations of that.
So that's interesting because $2,000 a month sounds like a lot. Most people that are renting an apartment, let's say, they're paying half of that. $1,500, let's say.
Yeah.
So So you're paying $500 a month more to get into your own house, but if you've seen any of my videos, you've seen that the housing prices have been skyrocketing for the past 5 years, well, even more.
Yeah.
So year over year, on average, a $300,000 house is going to go up about $2,000 a month. That's
Right.
kind of, that's a total rough estimate, and you got to take it with a grain of salt. But
Right.
last year, a $250,000 home sells this year for $275,000.
Right.
That's $2,000 a month. So,
Yeah.
if you do the math, it's actually not a bad deal to pay a little bit more per month right now in the short term, but then you actually own the house,
Yeah.
so that several years down the road, you actually have an asset that you can refinance, that you can
Right.
sell.
Well, in
do
10 years
whatever
down the road, your payment's still $2,000.
Yeah.
Right? So even if it's a little higher for rent, one other thing I want to point out, if it's not too overwhelming, is the tax credit program. So as a first-time home buyer making less than $75,000,
Okay.
if it's a family of 3 or less,
Okay.
or if you have more than that, it's $86,000. But you can get a mortgage credit tax for first-time home buyers that also puts $2,000 a year back in your pocket. So if you do the math on that, it's $166 per month. One of the things that we really try to do is we get creative. We pick the best loan program, and we really look at different options to find that best. Sometimes it could be as low as maybe $1,600 or $1,700 a month for the mortgage. But combine that with the tax credit.
So the regulations for the tax credit, it's got to be your primary residence.
Gotta live in it.
You have to live in it. What else?
It's got to be a first-time home buyer.
First-time home buyer, and that's it.
And you got
Income
to make
limit?
less than the income limits.
Which is $86,000.
$86,000 for families 3 or more. Main thing is if the one objection you have to buying a house is the down payment, that's the easiest hurdle to jump over.
And I heard you say that before we started filming. I think that's interesting. I know there are students that are like kind of in college, coming out of college, that probably are starting to think about homes. Definitely look into this. Look into, it doesn't have to just be Idaho. I'm sure the other states have.
Yeah, there's something like that in every state. That's right.
There's options out there for you to buy a home. Like David said, if the only hurdle for you to overcome is the fact that you don't have money for a down payment, that can be overcome
Easily. Yeah.
Thanks again, David. That's great info. And if you want to check out some other videos that I have on the Boise housing market, I'll throw up a screenshot right there. Click on that. And thanks for watching. We'll see you in the next video.
Bye.